welcome Esther Baroudy of State Street Global Advisors.
That's
welcome.
Right. Thank you.
And Esther is going to discuss a major issue at this point in the climate discussion, and that's whether the geopolitical turmoil, war in Ukraine, sanctions against Russia, very high energy prices will accelerate the transition to sustainable energy or will make a slowdown to the energy transition. And well, before I'll hand over to Esther, if you have any questions, please ask them. This is a workshop. I want to be want it to be interactive, so we can really go into this topic. Esther, the Dutch government has recently decided to allow coal-fired power stations to go back to 100% capacity, where they were on a 35% capacity up until quite recent. And they were even financially compensated for that. I would think that is exemplary for what's happening at this moment in the energy world. What's your take on this? How bad is that?
Well, I don't think they have much of an alternative at the moment, but I don't think these are long-term solutions. So we're going to show you, hopefully, through this presentation how, Russia, Ukraine, and oil supply apart, the transition could happen. So, yeah, and it's could, but there's a lot of research, a lot of money going into various areas, and I think it could be quite an exciting future.
Okay.
Parallel to fossil fuels.
Yes. I'll leave it to you then, and I'll make sure that if there are any questions that people can ask them.
Old fossils. We don't want to be old fossils. Right, here we go. So I think that if you look at the last sort of 20 years or so, you'll see that since at least 2014, people have stopped investing in oil. It's come down a lot in terms of its compound annual growth rate. So it's actually been declining since 2014. And oil companies now need quite a high price of oil to invest. So we have a shortage of supply. Plus, the supply that's coming is outside of the Western world. It's mainly non-OPEC. So that raises the question of energy security, as you've seen with our Russian friends. And then the big oil majors in the West, like BP and Shell, for example, are looking at decarbonization. Their cost of capital has gone up because investors are asking for better use of their capital or a different use of their capital. So you see, we're going to stick with high oil prices for some time to come. So I think that's going to drive an alternative to fossil fuels. And as you can see here, the climate transition is well underway, I would say. It's happening in parallel. A lot of it's driven by regulation. We're expecting new accounting standards to come through as the big major investors and asset managers like us are committed to net zero by 2050 and looking at how we can get our investments into that sort of mode, if you like, of transition. We have the global central banks who are working full-time at greening the financial system. And this is, conducting stress tests. They are very, very worried about a systemic failure happening, say, for derivative contracts on agriculture or whatever, going bust because of a hurricane, a tornado. People can't get their homes insured in the States if they live on the beach, et cetera, et cetera. So there are issues of equity there as well, and because poor people can't get insurance. They can't afford the cost. So there's a lot of things happening through the central banks. And then if you look at the governments themselves, they're planning to spend a lot on this transition. So you've got the EU Green Deal, the US infrastructure bill next year, $1 trillion kicking in with big projects, and then China wants to keep up is making new pledges. And they're saying now they can get there before 2050. So that's that. I just want to quickly go through how the IEA is projecting the decline. So they don't happen immediately, but they start to gather pace as you go through to 2050. Natural gas is the most in use. They're hoping that coal goes to zero. But you've got a bit of time, Andre. Yeah, next year you'll have your coal-fired station going.
But this graph is before...
before Russia.
Before Ukraine and Russia, yes.
But I think that, Indonesia, Philippines, and they are going to get a lot of help to convert. So, and climate, we have talked about this, so don't go too far afield, but it is geopolitical. There's a very big race to govern the Pacific between the US and China, and climate is part of the deal. They're offering them a lot of money on mitigation and adaptation now. So that is going on. So you can expect, those are the big users of coal, and you can expect that to be running down over time as well. South Africa, too. And then this is how the IEA sees it moving. So you also have growth, because the economies are growing, so you need some growth in the supply. But what they have is, this is the fossil fuels today, and how they were in 2020. And in 2030, you see, the orange one is the oil, the coal, and the natural gas start to run down, and in their place, you're starting to get more renewables. So solar, wind, here's some biomass, hydro, nuclear. Some of the, for example, hydrogen is driven by nuclear. So, there is the two happening. So there will be a role for natural gas, especially in the beginning, because you're going to have methane steam reform to generate the carbon. So that's not going to go away immediately. Now, we are seeing that people are changing their behaviors, and that is also going to generate some a demand, lower demand for carbon, and also better efficiency. So you're going to get efficiency in heating and so on, also bringing down the demand for energy. So that's, and we can come back to that later, but there's a lot happening here, especially with the companies we look at. And then for electricity, it becomes a big source of energy consumption, some of it driven by hydrogen, as you can see, but for every sort of block, like industry, transport, buildings, you can see that the fossil fuel element runs down over time and is replaced by another source of fuel. But it's still, a lot of this is still in its infancy. And the next page is on the hydrogen. Now, yes. But IEA. It's their charts. I'm using their charts, but I've also, I've read a lot from the Royal Society, which is the UK, a body of scientists that are looking at this in depth. The UK government obviously has a very big strategic plan too. So there, it's just, but a lot of these things are not yet investable. All right, they're happening over time. Some of them are in their research stage. But if you see here, for example, hydrogen production, now this is through electrolysis, and this is through using gas, and then accompanying that with carbon capture. And that's, at the moment, if you like, this hydrogen production through gas is 95% of it is produced like that. But over time, they're hoping that electrolysis will be a big part. Yes?
My question, I think, is in making these
assumptions. Yeah.
predictions.
Yeah.
What is the level of assumption in terms of this is what we expect based on?
Yes.
I'm wondering to what extent, we like it all to go down.
Yes. Yes.
right filter done
Yes.
for the right reasons.
Yes.
But to what extent are we here looking at information that is based on analysis of committed investment plans, or more like,
Yes.
well, this is the way that we hope it will work?
Well, so it's got to be driven by regulation, which is coming into place very fast, and then the investment side is us. And at some point, we won't be allowed to buy something which isn't green. That's how it's coming. And then the other thing is the governments themselves. So if you look at the UK, which is what I look at the most at the moment, and the US as well, you see BP on Teesside, they've got this massive refinery. They say, well, we produce hydrogen anyway. We've got all the infrastructure across the country to put in chargers. We've got the network. We can start converting the natural gas network to, electric and hydrogen, and Bob's your uncle, Okay, it might take 10 years, but what they're going to do is take the money they get from oil that they sell on the market, the cash flow will be going into this kind of investment. And a lot of it, if you listen to some of the ministers in the UK, they will say, we want to help BP and we want to help Shell transition. So you can imagine, and you've got Rolls-Royce at the moment, very well supported on small modular reactors. They're working on that. They're hoping to start, putting those in. The North Sea, very, very rich in wind, huge installations already. So that electricity is going to come in, but because it's, intermittent, they're going to use nuclear as a backup in the UK.
But are you skeptical about what's going to happen or the timeline?
Well, clearly there's always discussion on to what extent we are depending and relying on predictions which are always moving in time.
Yes.
Follow this is a primary example of an institution that tries to pin down the dates with hard numbers, and you see that in practice is difficult, and then you have definition issues. So I was just querying to what extent we are looking at soft or hard numbers.
Data, yes, I understand. Sorry, your name was?
Robert.
Okay.
Robert Pinacam.
Okay.
Well, I would say, Robert, that, these are, they've put this in as a goal, right? 2050. It could happen faster, it could happen more slowly. But I just feel that the way I look at it is humans like to take the easy way, always. And fossil fuels got started in the 19th century and off we went. But you just feel, if you live in a city now, the pollution's horrible.
That's why the 2030 is found by many people hard, that is within 7 years, that's the plannable future. So many people who are sometimes skeptical are saying, well, let's focus on that date, and anybody who says, well, I can only commit for 2050, then it's, probably he's a grandfather by that time, the man who set the stage.
Okay. So if you take a company like Nestle, they will tell you 2030 we can get to net zero with our own scopes 1 and 2. But scope 3 is completely out of their control. It's the coffee growers in Colombia or the cocoa in Côte d'Ivoire. And they can't control those jurisdictions. All they can do is help. So he said, if you want us to get to net zero by 2030, we can't. 2050 is perhaps, and they're doing a lot on clean water and etc. But that's the sort of company I would believe in, because they're obviously really serious about cleaning up their act and making sure that it's a decent place for everyone,
The key thing is scope 2 then, in terms of...
Scope 3, but you...
In terms of control, I know scope 3 is going to be big. Us, right? Gas, we drive electricity, but the scope 2 is where with the European legislation coming in.
Yes.
You would expect Nestle to exert more influence.
Yeah.
towards scope 3, but I'm taking too much of your time.
No, not at all, not at all. I was also thinking about supply chains, though. That's a big cleanup exercise. And the reason why they don't say 2030 for the shipping and so on, there's no way they can get it converted before then. Yeah, that's what we hear from the shipping industry anyway. But those are, so you see shipping, this is ammonia, and ammonia obviously is a carrier for hydrogen. So they're hoping these will be converted to hydrogen eventually, but it's going to be hard. I mean, it's hard to get the fuel cells for that, right, to be stable. But they really are saying there's going to be huge spin-offs in various areas from all this. It's not just going to be, right? So this is the carbon capture which is necessary for the hydrogen. And, they're thinking this will climb. Now, this side is not so well tested, but if they can crack some of the things for carbon capture, it could be really interesting. So I think this eventually could, because they're looking at the membranes to split the carbon from the hydrogen, all sorts of things, or making carbon solid, microwaving. So it's a big, I think there could be loads of benefits from there. So here, nuclear, and what we see is China, India, and the United Arab Emirates actually are really leading the way with new build. And they're expecting to be up to 50% of total global share. UK and Korea are new build, and then Canada, France, and the US are actually doing a lot of refurbishment. The US is really doing a lot of studies now on nuclear, but it's state by state, so it's not really a federal, yet there's not a federal policy on it. So what they do say is that you need better design, coordination on design, and the energy market frameworks as well. And so this is where Rolls-Royce comes in with the small nuclear reactors, and then by late 2030s, there's a Gen 4, which is thermal and can do electricity and heat at the same time. That's what I understood. So it's becoming very exciting.
We'll be needing nuclear energy, because that's, of course, still a very...
Zero carbon and very powerful.
Yes, but there's a lot
better
of discussion.
Better than a coal-fired station, right?
But is it also sustainable? That's, of course, the discussion.
They're saying that the new techniques are much better than the old. The old ones waste a lot of heat. So we need to see what they come up with.
Can this transition happen without nuclear energy, you think?
It won't be as efficient. Because when they're thinking that it'll be the link. So say your renewables coming in, but it's intermittent, right? Mm-hmm. The wind, and so you need a backstop. And if you want to use one that isn't pumping out carbon, nuclear is the best. And the new modules are going to be quite flexible, they're saying. So, and very efficient.
Okay.
But this is, and I'm going to show you a chart in a bit, which shows why we have to be really careful. I mean, as investors. But so this is what they're saying is needed. Now, you might argue with this, but they're saying 5 trillion per annum to get us to this. New technologies. So this is electricity systems, and this is electrification. So you can see that it's very big, and some of it obviously powered by hydrogen and so on. But electricity generation is still a very big part of the total. So then we go to here, and
because that's quite a large figure, 5
trillion. 5 trillion these days, with all the money they've pumped into the system, it's not that much. Look, the Fed's just taken out 2 trillion.
How much are we investing?
It depends on the costs. of building, right?
How much are we, because this is, you mentioned 5,000 billion up until 2030. How much is being invested at this stage? Is there any estimate of that?
I haven't seen. I mean, if you look at this, it's about 2 trillion, right? If you look at the average here. It's hard to know. I mean, there's so much going on if you add in, and what do you add in? Do you add in the UAE and China and, and what they're doing on nuclear?
But it's a feasible amount, you think?
Yeah.
Even if the central banks are going down with their
well, they are now.
programs, yeah.
As soon as they feel that productivity is picking up and supply is coming back, okay, because you've had a surge in demand, right? And I saw the blockage in supply recently. That's what's driven your inflation. And then you've had the overlay from Russia. But as soon as it settles, I think that they won't, okay, the US won't put the brakes on too sharply because they know there's a massive amount of investment going into the US economy, CapEx, which is going to generate a lot of supply, probably from next year onwards. Okay. Because the reshoring that's happening is actually physical. I mean, they've got 1 million jobs advertised in manufacturing. And they're building huge structures for manufacturing. Okay. So it's, I don't think they're going to put their foot on the brake as hard as people think. The other thing is the market's doing it for them, the curve. And they've taken out, they're not letting the banking system run down its reserves. All right? So as soon as the banking system brings down the reserves, they suck them out. So they're trying to keep the rates, but they're actually pulling money out of the economy. So the Fed they're not stupid at the Fed.
Well, that's good. Nice to hear. Yes.
Yeah, so, but I don't know about the ECB, but now here, financing no, the ECB, I feel, doesn't know their economy as well as the Fed does. The Fed, they are so into their statistics. And if you want to read the New York Fed are brilliant. And if you want to know what they're going to do next, just read John C. Williams of the New York Fed, the president. But financing the journey to net zero, so you can see there's a lot already of trillions and trillions under management here, ready to redirect as soon as everything's come together, i.e. the regulation and so on, okay? Because as long as we don't know that we're on a level playing field, we're not going to probably move that fast, okay? Now, but the way we're playing it is through IT, because we know already that corporate investment very, very, is spending a lot on IT to become smarter and faster. And we know that defense is starting to move very, very fast into IT areas, quantum and AI, and those will be used to drive the smart grids and climate and match demand with supply, okay, in a very, very fast fashion. Now, we're talking about the next 10 years, but we feel that real IT, I'm not talking about Facebook or any of that, I'm talking about the hardware and the software is going to be, and you can see here in the US, it's really gone up as a proportion of GDP, and you can see here that industrial, the CapEx is also, industrial equipment is also going up as a % of GDP again, after a long period of decline. So you can see that, but all of this will be driven by IT. So IT is, we think, a very big and very lucrative vehicle in the next 10 years. And then here, if we go back to climate, it's a huge spectrum, and this is where the IEA is probably here. Very, very risky, but in the meantime, everybody's got to transition. Everybody's going to have a plan. And we even think, we see it now with our US companies, they already have a plan. Most of the companies have a very good plan. Alphabet is almost at net zero already, okay? And so the companies which are younger, I feel, they really have that drive. They know their customers want net zero, et cetera, et cetera. If you've got a brand, a consumer brand, and it's anti-climate, it's chopping down trees, forget it. It's just like, your stock's going to go to zero. Okay, but the considerations. So for us as investors, there's a lot to go around the new sort of scenario that we're looking at in the next few years. So you've got the governance, you've got the strategy, you've got to manage your risk, and then the metrics. At the moment, the data isn't very good or very comparable, so we need to have better disclosure. And I have to say, governments are going to legislate now. In the US, there is a lawsuit that will probably come against the SEC to stop them from adopting a lot of this, okay? So we have to see where that goes, but I mean, Europe, you see, they're pretty well set on the way. And the companies in the US, but it'll be a setback if these senators and the US Chamber of Commerce actually get their way there. But we'll have to see. They want the SEC to water down its proposals. The proposals are actually quite tough, okay? So that's...
What's your expectation
of it? The thing is, it's got to be tested in court. If it's tested and they don't win, I mean, it's a good sign. We have to see. It might force, what they're saying is that the SEC might try and do, go around and say, well, this is coming from other jurisdictions and we need to make sure that our companies do it. We'll see what happens. But that lawsuit, we need to watch it very carefully.
It will take how many years?
I don't know.
10? 5?
I haven't seen. I just saw a press release yesterday which mentions the lawsuit.
So maybe can you explain what the lawsuit is about?
Yes. So the SEC has set out a number of proposals on disclosure, climate disclosure, and the U.S. Chamber of Commerce and a group of senators on the Republican side have said that the SEC is overstepping its mark and interfering with the way these companies are doing business, which is against the law as they see it. That's all that we have so far. So they're going to test, I guess, what the SEC wants in court.
And there's no companies involved there? Actual companies?
No, but if the SEC makes this a regulation, the companies will have to comply with these standards.
No, I mean on the other side, the party that's going to court. It's not. There's no.
It's the Chamber of Commerce.
Okay.
So then you need to see who's backing them.
I see.
This is a lawsuit about the anticipated regulations.
Yeah, because it's a call for comment at the moment. I don't think they've put anything out, no. But you see, the SEC is working very closely with the US Treasury and the Fed. And so, and obviously there is a lobby, like you said, against this going through. So we have to see what happens.
Mentioning the US a couple of times, will things change should the Republicans win the midterms in November?
I don't think they will, but they'll keep happening bottom up. I'll give you an example. Con Edison, which is the big utility for New York, I met with them recently, and what they were saying is that they've had a rise in temperature in New York already, and the water levels are going up in New York City around it. And what they found is as the weather gets hotter in the summer, people leave their air conditioning on longer and at a higher level. So what's happening is that their equipment is getting hotter and hotter, taking longer and longer to cool off at night, And therefore, they're having to replace it more quickly and with new equipment. So this is real. I mean, it's not just, And also, because of the sea level rise, they're going to have to move some of their power stations. So, and they're also looking at renewables as well. But, But what you have to be careful with these utilities is they're heavily regulated on the fees they can charge to their customers. So, I don't know how profitable that's all going to be, but nevertheless, they'll be ordering the equipment. So that's where you can have the play if you're an active investor, yeah. So that's, and then just to say that State Street...
Sorry, does it answer your question? Okay.
It gives a feel, yeah. I mean, all of this is feel, like you were saying. But I just see from my companies, when I read these transcripts, I just see that they're really enthusiastic, some of them. If you want a couple of examples, there's Train Technologies, which is in air HVAC. They have a really good program of both getting their own emissions down, but also helping their customers. I just feel the train's left the station that way. I really do. In the UK, it's the same. People are really, especially young people, they're really keen on this. I mean, some of them to the point of paralysis. I mean, right? They throw themselves on a road and, well, yeah.
Yeah.
Yeah. So here, now at State Street, I have to say that the management really takes this seriously, right to the CEO of the whole corporation. So we do have a very big team on the asset stewardship side. They are carrying out engagements with the companies we own, and if we decide we want to see a company because we're not quite happy, we can ask this team to bring in the chairman, etc., if we need to. And this is, the engagements are going up. So we have it's very active on this, and they will be assessing the transition planning. I don't know why this has come out like this, but they'll be covering these quite a few indices. Okay, so these are all the indices we invest in, and from next year they're going to take voting action against directors. Okay, so it's quite serious. I mean, it's a good team, and it's headed up by a lady called Karen Wong. I don't know, some of you may have met her already, but she's very serious on the subject. So that's that. And then in terms of how we're going to do it, and we're doing it already, our analysts have this scorecard, so we bring in the data from all the different, sort of sources like MSCI, etc. And so we know how our portfolios stack up against these scores, but and versus the indices, but what we're also doing our own overlay on how serious a company is about the transition looking forward. Okay, we're not interested in the past, we're really interested in the future, and whether we believe what management's saying, on the net zero, etc. And Nelly, you said there was if you want to see our scorecard, you want to say the...
Yes, can I just interrupt that? You can't read this right now, but the slides are in the presentation. You can scan the QR code that is on our little table over there, and all the documentation that is on the table, as well as Esther's deck, is on that web page. So just scan the QR code, and then you can see these data in details you're not supposed to be.
Slides will be sent after anyway, so you'll get the slides, yes.
But we do have a transition strategy, as I mentioned before, because that covers the whole market. But the analysts will also look at the physical risks and the current costs of transition, and then they'll also look at if a company has opportunities. But with the opportunities, you have to be careful. There could be new technologies coming in, destroying the the pricing power of that company, etc. So it's not going to be an easy ride, is basically. And this is how we would construct the portfolio. So we'd look at the proprietary characteristics, qualities of a company, and then it's a very good transition score. It would be included in the portfolio. as long as it can generate sustainable growth at a decent valuation. And we'd also look at other things to build a portfolio, such as diversification, what the risks are for that company, and the opportunities. So that's really how we're going ahead with the work, going in the future. That's it.
Thank you. So, well, we've still got some questions, yes? You seem to be very optimistic about, say, the near future. Well, you mentioned this in the beginning, that you consider what's happening right now more or less as a hiccup, and we're on this road already. There's no turning back. But what if this war and this situation lasts for a couple of years? Already you see some asset managers, well, having second thoughts about their sustainable route. You see the Green Deal in Europe is being slowed down. Is there really that much room for optimism? Because the money still has to be put in place.
Well, I mean, I just feel if this war continues, we might not make it. Full stop. It's a bit binary, right? You either look on the bright side or the horrible side.
Yeah.
So I'd rather look on the bright side and continue.
But of course,
I mean, I'm not an asset allocator. I'm given the money and I'm told invest. So I will look for the best possible opportunities for my customers.
yes.
And I don't run into short-term things.
No, but if you see what's happening with the shares of fossil companies and their profits, they're going.
Yeah, Andre, you've watched the last few days.
Yeah, it's going down again. Yes, so that's a good sign.
Who knows? I mean, the markets at the moment are, I would say, very nervous. They don't know how to price the future, right? We have counterparts who don't always want to give us a good price, or who will move the price a lot against us. So you don't know what the real value is at the moment. But I can tell you, when I see some of my companies and what they can achieve, then I have to feel optimistic. And I'm not just saying in this. I'm just saying in general, and especially in IT.
Yes.
I mean, the breakthroughs are enormous. Yeah.
I see. Fair enough.
And it's good for people. I mean, it's good for everyone.
Yes, no doubt about it. But
it's productive and it's efficient and it's fun, you know?
Maybe we should put more emphasis on the fun factor.
Yes.
Are there any questions on this topic in the room at this stage? Because I have some other questions.
Yeah. I mean, it would be nice to know what the guys are doing. What do you do as, which part of the markets are you in? That would be nice to know.
Yeah. No, well,
that might determine their optimism or their pessimism as well, you know.
Yeah, but maybe I can ask a question for the people in the room or the viewers who will watch this later on. How should institutional investors like pension funds act at this stage? Should they just go on or ignore the fact that fossil industry is going up, making the profits? Should they wait maybe till the war is over, see whether the supply chains are getting back to normal again? Or?
Well, look, it's less than 5% of my index, energy as a whole. So you're not having any, you're not running a huge risk, to be honest.
If you divest?
If you don't have any.
No. Well,
energy. It's 5% of the global MSCI index, right? So if I'm running a concentrated fund, the average position says 3%. Okay, this is 5%. Is that 2% going to make a huge difference, even if it goes up by 100%? I mean, it might knock me back a bit, but if I feel that this is a very, very volatile industry where who knows where the supply is going to come from, where the demand is going. I mean, like now, we know that Russia is selling very cheap oil to China. That means the energy flows are being rerouted somewhere else. So you might suddenly get a collapse in the oil price.
Yes, but it might slow.
So I don't want to risk it like that. I know you'd love to invest in it, but not if you look
There's a
10
question.
years.
Maybe,
Oh, sorry.
Yeah,
You say
5%.
that energy is only 5% of the MSCI, but every other company in the MSCI uses energy. So
True.
by not investing in it, you're actually sort of losing a hedge.
Only if that company doesn't have pricing power. So if you're running a 30 to 40 stock portfolio and you know your companies can cover the cost of energy, they will hold firm. Or they can improve their productivity some other way. Right? So you want your margins to be able to cope. But that's why the market's going down, right? I mean, energy sticks out at the moment as a positive, but it might not stay like that. It's the most wacky industry on the planet. It's a commodity, dum, 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 dum. It's one of the most cyclical industries there are. That's what I worry about because, I mean, in normal times, and you've had this very abnormal 2 years, right? But in normal times, you have, say, GDP on a trend, global GDP, okay? Now, what grows most in line with GDP? Consumer staples. It's purchasing power and population, all right? And then you keep going down the curve till you get to the banks, dun, 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 industrials, the capex cycle, and then commodities following the capex cycle. It's not that, but then you need to know where the cycle is going if you can. But that's why we try to go for those companies that are going to deliver sustainable growth over the medium term. And we feel that IT has moved into that space, simply because of all those drivers, the defense, the climate, just companies tooling up,
I see. Does this answer your question?
No, she's not convinced.
Okay, you already saw that.
It's also like the IT part. It's a supporting. It supports the general infrastructure rather than actually making an impact on the supply and the production.
You disagree, I think, here.
Well, you can have, I've been into factories where there's been 3 people on the floor, and everything's driven by a computer. And when there's a repair, it's all intervened by computer from somewhere else. I don't know. I mean, it depends how you look at it, I suppose. There won't be many people working on the floor going forwards in a big in these clean spaces where they make microchips and so on, it's all automated. You can't have many people breathing on the... Yeah. So I feel these are all big, automation is a huge driver. That's how China's going to beat its demographic problem.
I see. I think it's also a state of mind.
It is a state of mind.
Yes.
I don't see where it ties into emission reduction.
Ooh, okay.
Can you repeat that? Yeah.
To me, I don't see how it correlates one-on-one to emission reduction, having more IT in place and having everything more automated.
Yeah. Well, if you say that Google can now spot and measure from space every bit of methane that's coming out from any factory on Earth and report it to the authority.
Yeah, I'm probably more with you there, but I think it's,
It is a state of... I don't know, short of doing a proper seminar on IT, I don't know how you'd convince anyone.
I see. I've got one, maybe one last, because we're more or less running to the end of this workshop. But recently there's been some interesting developments. You mentioned the lawsuit against SEC. Of course, several asset managers have been visited by regulators for greenwashing. DWS having the German regulator, BNY Mellon, been fined by SEC. What's your take on that? Is that a good thing? Will it hold up in court if this ever goes to court?
For the SEC, that's not a great thing. But for the investigations, I think it's good to have regulators that are monitoring what the industry does on this, because you could get people making claims and not following them through. And I think then that would destroy trust in our industry, and that's the last thing we need. Last thing we need. After 2008, it's been very hard, and I think a lot of people still, the average person in the street still doesn't trust our industry. And we need to have that.
Yes.
So I feel that integrity and honesty about what you do is very important.
But do you think there will be enough, is the regulation strong enough to
The regulation
make a case
hasn't-
against those companies? Against
Not
those
really.
estimators?
That's the problem, is that the regulators to date haven't made it easy for investors like ourselves to actually figure out what they want. Okay? But I think that this is solidifying now, and it's becoming plainer.
So it's a good development that
Yeah.
that you get it back.
Especially when you have the central banks, they're very straight about what they want. Yeah.
Okay. Are there any further questions? Okay.
Yeah.
But then I would like to thank you again, Esther, for your presentation.
You're welcome.
Thank you.
Thank you.